Welcome you all in another session of Real Estate Private Equity Fund. So, in this session, we are going to talk about cap rate. See, cap rate is a very critical thing in real estate private equity fund. All right, so let's discuss about cap rate. Cap rate, some sort of like it's a capitalization rate is a measure of the expected rate of return on real estate investment such as commercial rental property. In a simple terms, the cap rate converts one period of economic benefits or a net operating income into an estimate of a value. Sorry. Therefore, the cap rate is conceptually a function of the income potential of a rental property and the perceived risk attributable to the investment. How we can compute cap rate or capitalization rate? Net operating income from the property. So it could be, let's say, rental income or miscellaneous income from the property minus the the operating cost. So that would be your net operating income divide with property value. Then you'll get cap rate. This is how basically we compute cap rate. So now again, how to calculate cap rate? So if I now again little bit go in more detail. So look at this. The cap rate is calculated by dividing a rental property's net operating income by its market value as of the present date. Net operating income measures a property's earning potential based on its core income drivers, namely rent payments minus its direct operating expenses, basically property taxes and all, and then you will get net operating income. What about property value? The current market value on the other hand, and is it the fair value of a property on the present date? Albeit the purchase price can be used at that time, and the step by step process here you can see the step 1 compute the net operating income, step 2 calculate property value or consider purchase price, divide net operating income by the property value, convert into percentage. That's all. So if I talk about formula, we have a formula which already we have discussed. Cap rate, net operating income divided by property value. Where net operating income, which is the calculation for a net operating income would be rental income plus ancillary income minus direct operating expenses. That's how you get net operating income. And in the interview also you may expect this question. So please make sure that you have a good amount of understanding of this. All right, so let's now discuss about this cap rate through example. Let's say suppose a commercial rental property is expected to generate 12 million in a net operating income in 2024, and comparable properties nearby are trading at 6.0% market cap rate. Net operating income again, which is at a 12 million, market cap 6%. The 6% market cap rate reflects the annual percentage return on investment on the rental property, assuming that the property was purchased outright without financing. And the direct capitalization method, one of the core real estate appraisal techniques, states the value of a property can be estimated by dividing its stabilized net operating income by the market cap. So now if I talk about formula, which is implied property value, which we need, stabilized net operating income dividing by with market cap rate. Given the 6% market cap rate, the implied market value of the property is 200 million. How? Let's compute it. Implied property value, which is like 12 million, divide by with 6.0%, which is come to at 200 million. Since net operating income and property value, the two variables in the cap rate formula are known, and we can solve for the cap rate by dividing the net operating income by the property value. Cap rate is equal to 12 million divided by 200 million, you'll have a basically cap rate. So it means now you can compute cap rate, you can compute implied property value, you can even compute let's say market cap rate and all of that, right? So this is how basically you can compute, and you can again try with your practical examples as well, that give you more sense right, to understand this cap rate in details. So now if I, let's say, compute the net operating income, right? So the formula is like implied property value into cap rate. So let's talk about it. What is implied property value? Which is a market value of the property. Cap rate, which is expected rate of return on the property. Updated, the practical example, if you see the implied property value, which is at a 75k dollars, cap rate is 8%. So in a decimal form. So now if you just simply multiplied, net operating income would be around $6,000, right? So another example which I have, like implied cap rate and actual cap rate. So you might expect questions in an interview around like difference between implied and actual one. All right. So if I talk about implied one here, the formula would be like stabilized net operating income divided by purchase price, right? So example, let's say $10,000, which is annual income from the property after stabilization. What is stabilization? We'll discuss that in next session. Purchase price, which is at again $100k dollars, right? Implied cap rate is $10,000 divided by $100k dollars would be somewhere around 10%. So implied cap rate is, which is at a 10%. If I now talk about actual cap rate, formula says net operating income at exit divided by sell price. So this is something maybe at final, at the time of final true up, we are calculating the actual cap rate. Net operating income at exit is the actual annual net operating income at the time of selling the property, and sell price is the price the property is sold for. The example, like net operating income at exit, which is $12,000, annual income at the time of sell, potentially higher due to property improvements or rent increases, right? And sell price, which is let's say $120k dollars, which is let's say property which is sold for, right? If I talk about calculation, 12,000k dollars divided by 120k dollars, which is around again 10%. But the difference between implied and actual is one implied, which is considering purchase price and stabilized net operating income, and actual, which is considering the net operating income at exit, at the time of exit. So that's how you can differentiate. All right, guys, this was all about cap rate. If you have understood this, then please go and comment in comment section like yes, as you have understood what is cap rate. And if you need more and more sessions, so make sure that you are also sharing this with others as well. Look, we have designed course around private equity real estate accounting. If you are really interested, please communicate with the GMT Academy experts. Will help you to understand real estate private equity products, waterfall calculations, and lots of other terms. All right. So thank you very much for watching this. We'll see you next session. Thank you.